Now welcome in a very special guest, Girish, MD and CEO at PNB Housing Finance. You have seen to him in earlier avatar of Canfin Homes, and now, of course, he's representing PNB Housing Finance. So a complete change is what essentially has happened. So talk to us about your Q2 performance first, and what are essentially the new targets as well that you would be setting as you have taken charge of the company.
When compared to last year on a YOY, I think we have put up good numbers. I think there are two areas where we need to work, which we have identified. Of course, one is on the delinquency. We need to bring down GNPA, which we are planning. And you can see over the next few quarters, GNPA will keep coming down. Number one. Number two, in terms of credit cost, I think for this year, it will be around 1%. And next year, I think it will normalize. And if you look at disbursement, if I talk about H1, there is a growth of 40%. And whole year we're talking about growth of 40% in disbursement, and book growth would be close to about 10%. So this is what these are the key takeaways in terms of NIM and spread. I think for a company like PNB Housing, we feel that 2.2 spread and 3.2 NIM on a long-term basis. So there might be few fluctuations in the near future. It could be much above what I mentioned now, but in the long run, it will be 2.2 and 3.2. This is the threshold.
So how does it feel? Just about a 1 week time, you've taken over the MD at PNB Housing, new targets, new set of people you're working with. How does it feel to represent the company in just about a week's time?
I think it's really great because this team has done wonders in the past, and this is well aided by market, which is very, very robust. Affordability is quite low, demand is robust, and it is coming in from all segments and all geography. And this is something which the team knows, which I have been doing this for last many, many years, for more than 2 odd decades. So I think nothing new. I think only the tag is different, and a little bit of strategy is different. Otherwise, I think everything remains the same in this space. So I feel really honored, and I feel great to be part of this team, and team is really committed. So you will see going forward our vision of growth with asset quality coming through in the next few quarters.
Congratulations on your new role once again.
Thank you.
Right. You just alluded to the fact that you're looking to expand into the affordable housing loan segment. Tell us a little bit about what kind of demand momentum you're seeing on ground. Where is the bulk of the growth really coming in from, whether it's the affordable housing segment or otherwise?
Yeah, I mentioned about market being very robust. I think it is robust in all segments. Talking about segments, largely two segments. One is affordable and the other one is non-affordable. Today, if you look at a book, a retail book is 52,000 crores. Out of that, affordable is 3,000. Non-affordable is 49,000 crores. So while we continue to do well on the non-affordable piece, we want to really scale up on the affordable. And if you look at markets, I think South is a very good market. North is doing well, barring 1 or 2 states. Then West is a good market. I think across, barring some states in East and couple of states in North, I think most of the states are doing well in affordable and non-affordable. So the demand in affordable is slightly more than affordable. So our focus going forward would be to aggressively grow the non-affordable book and very, very aggressively grow the affordable book. So going forward, incrementally, we want to have mix of 75% non-affordable and 25% affordable, because we see huge lift in yield in the affordable segment.
Kousgi, there's also been a shift in strategy with focus on retail loans now. So do you see the share of corporate loans dropping even further? And then what is your AUM target for the fiscal?
So I mentioned over last year, we'll be able to grow book close to about, I'm talking about the book, not AUM, because 8,000 crore is the assigned pool. So we will be able to grow by, let's say, close to 10% this year. Disbursements 40%, book would be close to 10, maybe 9 or 8 or 9%. So it will be close to 10. On a steady state, in the long run, we want to grow disbursement at about 22 to 25% and a book of about 17 to 18%.
Right. So, I had just a few questions about, PNB, the sort of revamp that it has seen, and now that you've taken over charge, what are the initial challenges? Because last 4, 5 years, they've tried to do a lot of things, but somehow, some way or the other things have fallen out. So, what will be your key challenges right now? And how do you plan to resolve, the last 4, 5 years issues, which have actually, I mean, it is not triggered off, it was never off the table, but somehow the execution never triggered off.
Actually, there are no challenges. I see only opportunities. I see a lot of scope, on the GNPA. So you will see quarter on quarter GNPA coming down. I think, but for that, I don't see any challenge at all. I think, of course, we need to get the growth back, and we have got the growth back. In H1, we have grown by 40%. Last year, quarter one was COVID impacted. So even if you have to, moderate that, discount that, the growth in this year H1 will be about 30%. So this year we're talking about 40% growth in disbursement. So growth is back, and we will further grow from this level. A. B, there has been some challenge on the book growth. Even today we have the challenge. We are trying to fix the problem. Basically, the closures are very high. This includes all type of closures. So we want to bring that down. We have a very strong retention team. So we will work on that. A. B, scale up our disbursements. So eventually, book growth will catch up. So I don't see any challenge on the growth front. On the GNPA front, yes, definitely we have a pool which we need to work. We had a lot of challenges post COVID. I think now that's history. So from going forward, I think you can see improvement in the GNPA.
All right. So, how when loan growth happens and GNPA improves, how does the return ratio start to see operating leverage on the higher side as well? Can you just tell us the only way to probably make books look better, higher, or return ratios look better is growing loan growth, especially in the retail segment?
See, our focus would be largely on retail. So today the corporate book is 5,700 crores. So the book is degrowing, and we may start corporate book in future. We are not sure of the timeline. We want to bring down delinquency on the corporate book to a reasonable level, and then think of restarting. So till that point in time, the story is going to be largely on retail. New dimension to retail is that not just non-affordable, even affordable, so that we will have that kicker in terms of growth in the disbursement and book. Now, talking about margins at this point in time, I think it's really fluctuating, and therefore, we feel that 2.2 spread and 3.2 NIM is what we will try and protect, so that we have, fix on the margins for next few quarters, and then relook at the margins again. So 2.2 and 3.2, a growth of about 22 to 25% on the disbursement, and book growth of 17 to 18%. I think if we can get this piece right, I think rest all would fall in place.
Absolutely, and good luck with that, Mr. Kousgi, and good luck with your tenure as well at PNB Housing once again.
Thank you.
Okay, that's the word coming in from Girish Kousgi, newly at the helm as MD and CEO at PNB Housing.